Thank you, Steve. ABC 7 business commentator Richard Stern is joining us now. And Richard, it was a mixed Tuesday on Wall Street with a little bit of volatility thrown in just for good measure.
Well, you got to be careful what you wish for. Yesterday, I complained that nothing was going anywhere. So today, we did just the reverse. The Dow Jones Industrial Average was down by 40 points at the open, down by 158 points at the low of the day, but a significant rally after that. So things weren't so terrible at the closing bell. The NASDAQ higher for the 8th consecutive day. Yes, we're seeing things like Amazon and Netflix just going crazy, and so does the NASDAQ. Let's take a look at the final numbers. The Dow Jones Industrial Average down 55 points, exactly 1/4% at 21,574.73 on volume of 644 million shares. The NASDAQ, as I say, look at the up arrow, up almost 1/2%, not quite 30 points at 6,344.31. That on volume of 1,507 million shares. The S&P there's barely budged, up 1.5 points, 0.06% at 2,460.61. You may recall, if you were watching yesterday, I said that Netflix announced its earnings after the market closed. In fact, that's exactly what happened. So investors had lots of time to think about how strong those earnings were, and boy, were they strong. Shares of Netflix, which have been up more than 25% this year, were up more than 13% today alone. How's that for a move? Netflix said they opened have new subscribers to the tune of 5.2 million in the last quarter. That versus the Wall Street consensus, which had been looking for 3.2 million. And they also said that they now have more subscribers outside of the U.S. than they have domestically. There's a company that's right now hitting on all cylinders.
Sure looks like it. And some news on Amazon, which is another pretty good one, too.
Speaking of hitting on all cylinders, it closed at an all-time high today. I know I keep saying that, but today it was up $14. It is now trading at $1,024 and change. That's worked out pretty well for investors also.
Sounds like it. Richard, thank you so much for the update.
You're welcome.